All right, it's our last chapter of financial accounting new material. So this is chapter 12, and I think that it's a great summary chapter. It reverts all the way back to chapter 1 stuff that we learned way back in chapter 1 related to cash flow, and it's just basically a review of cash flow topics. And so it's fairly short. I'm not sure if I'll do it in one video or two, so I need to pay attention. 236. Okay. So in general, when we're looking at cash flow, it's actually one of my favorite, probably my favorite financial statement. I know that income statements tell a lot of information about the company because you can tell how much net income they made over a period of time. Also balance sheets, just identifying like how much assets they have compared to liabilities and equity. Great financial statement. A statement of retained earnings, like how much net income did they have and how much did they give out to owners as dividends. Good information. But cash flow is so important because most businesses, if they're going to fail related to cash flow activities. And you can tell so much about a business by just looking at their cash flow. And so here what we've got is we've got two companies, and right now they look identical. So I'm looking at company A and company B, and company A has revenue of 500 and expenses of 425. So their net income is 75, and so is company B. They also started and finished the year with 25,000 in cash. So everything looks good. I mean, I don't see anything concerning about these companies. Looking at some information from the income statement and something that I saw on the balance sheet. But when we look a little bit deeper, if we look at their cash flow, we could tell a lot more information about the business. And so what we see here is, as far as cash receipts, this company brought in 455 and then spent 455. This company brought in 410 and spent 410. Again, overall, doesn't look bad, right? Because they started and finished with 25,000. But let's look and see where they got their money from and where they spent it. Company A brought in 450 from customers, while company B only brought in 350. If you remember, their revenue was 500 in both situations. So they both made sales to customers of 500, but company A brought in a lot more of the money. Now, alone, I wouldn't be that worried about that because maybe this company just made a big sale at the end of the year and hasn't brought in the money yet. But maybe this company is struggling with cash. I don't know. I mean, it seems interesting that they would make sales of 500,000 and only bring in 350. This company spent 380 with suppliers, where this company spent 400. Look, this company spent 400 with suppliers, but only brought in 350 from customers. That's concerning. Company A bought some fixed assets. So did company B, but they didn't buy nearly as much. And so company A is investing in themselves by buying some fixed assets. They sold 5,000 worth and they bought 70. But look at company B. They sold $60,000 worth of fixed assets and they did not replace them. It almost looks like they're trying to liquidate. Maybe they're just having big cash flow issues. And so to bring in enough money, they're having to sell off their fixed assets. That's equipment and buildings and stuff. And they are not replacing them. And that's concerning to me. Company A also had enough money that they invested in others. So they bought some investments in other companies. And so these two companies are very different. And that's what I want to point out to you is that by digging into the cash flow, I can actually see a lot of differences between these two companies. And so it's important that we look at cash, and why cash is so important is that cash is what pays the bills. Number one reason why small businesses fail, cash flow. And so it's really, really hard when you're trying to run your business and you are waiting on some money from customers, but your bills are due and you're trying to pay your bills. You've got to pay your employees, you got to pay your taxes. All those things have to happen, and you have to bring in enough money to make those things happen. And it's stressful. And so when we look at cash flow, that's where we uncover a lot of those kinds of issues. So cash flow, just a review from chapter 1. This chapter is full of review, which is great because we're getting ready for our final. So we have 3 cash flow activities. We have operating, investing, oops, spelled that right, and financing. And so those are our 3 cash flow issues. Operating, we define that as everything else. And so that's annoying to start with that. And so let's come back to operating. Let's do investing first. And so for investing, we can invest in ourselves or we can invest in others. Investments in, so investment in yourself, or you can invest in others. So if you invest in yourself, you're trying to make your own business grow by investing in long-term assets, PPE. is the main thing we see in that section. Also intangibles that we learned about in chapter 9 would also go in this category. So like if you buy patents or you buy trademarks or you buy copyrights. So those kinds of things are also considered investing, but it's buying things that you're investing in yourself long term. So buying supplies is not investing in yourself, because buying supplies is a short-term item that you're going to just buy some paper and then use it up. And so we're talking about long-term assets. We call those fixed assets, PPE. Okay. And then investing in others is buying like stocks and bonds and stuff in other people's company. So loaning money to others, like notes receivable, when you loan people money and you charge them interest, that's investing in others. Okay. So that's investing yourself, invest in others. Financing is owners and loans. So that's how we usually explain it. Owners and loans. So owners is getting money from owners. Which is common stock. And paying dividends to owners. I'm going to make all this smaller so that I can fit it all in one row so that my rows don't get screwy. But you guys can just be writing it off in the margin. So getting money from owners, which is common stock, and paying dividends to owners. Okay. So paying dividends to owners. So I'm referring to actually paying out a dividend. So this is issuing shares of stock is common stock, and then paying dividends on that stock, and then borrowing and repaying loans. So loans go in this section. So if it isn't investing in yourself, investing in others, owners, or loans, it goes in operating. So operating is everything else. So it's your normal stuff. So your normal stuff is getting money from customers, paying your employees, paying your taxes, paying your utilities, paying your rent, normal stuff. All of that goes in operating. So your day-to-day transactions are mainly in the operating section. So the three foolers are ones that students usually get wrong. All three of these go in the operating section. So all three of these go in the operating section. All interest goes in the operating section. Now that feels weird, because if you're receiving interest, you feel like you're investing in others. And if you're paying interest on a loan, then you're like, oh, well, that's financing. So paying interest on debt feels like financing because it deals with loans, but only the principal goes in the financing section. All interest operating always. And the rationale behind that is listed here, but like, if you choose to get a loan, that's how you're financing your business, but that interest you've got to pay day to day is going to affect your operations. So, and then interest received on investments, like interest you receive on your savings account, that also will go in operating. So when you invest in others and you get interest, the investment is considered investing, but receiving that interest day to day goes in the operating section. And then dividends received is different than dividends paid. When you pay a dividend, you pay it to your owners. But when you receive a dividend, it's on your investments. So students want to put it in any other section but operating, because if you're paying dividends, then you put it in financing. And if you're receiving dividends, you get them from your investments. And so you want to put it in investing, but dividends received goes in operating. And the reason is you receive those dividends on a day-to-day basis and you can use them for operations. So again, these are the three foolers. These are the ones that people get wrong. Okay, so the next whole page is going to be us going through and identifying if things go in operating, investing, or financing. So what I'd like you to do is go ahead and pause the video, and I want you to try to do all of them. So inflow, outflow is just if you're receiving money or paying money. So it's just either inflow, receiving, outflow, paying. And then what section is operating, investing, or financing. And I want you to try to do these on your own. This is a good practice one that I tell my students when they're getting ready for the final exam in person to print this page and do it again. This will also help you with one of your homework tabs. So go ahead and hit pause and try to do them on your own, and then you can check your work. So pause. Oh, are you back? Okay. So cash collected for interest. So first I'm going to go do my inflow, outflow. If it's cash collected, it's in, and if it's cash paid, it's out. Proceeds means you're receiving money. Cash proceeds from the sale of PPE. Money's coming in. You would deposit that money. So that's an in. Paying dividends. Proceeds from the sale of marketable securities. Proceeds are in. Cash collected is in. And then we're going to paid for suppliers, paid to retire debt, paid for investments, paid for interest, paid for taxes, loaned to others. Okay, if I loan money to others, then money's going to come out of my account. Paid for operating expenses, paid to buy PPE, proceeds from the sale of our stock. Okay, so proceeds are in, we're receiving the money, we're selling shares of our own stock, like common stock. Cash proceeds from loans. This is when we get a loan, so that's in. Okay, so now we need to go through and we need to figure out. So all interest is operating, employees is operating. PPE is a fixed asset, so that's investing in myself. Paying a dividend is financing. Cash proceeds from the sale of marketable securities. Marketable securities are investments in others. And so this is investing. So this would be like if I bought stock in McDonald's or something like that. Money from customers is operating. Suppliers of inventory, that's your normal stuff. You have to buy stuff, you have to buy inventory all the time. Cash paid to retire debt principal. This is a loan and you're repaying the principal, not the interest of a loan. So that's financing. Cash paid for investments. So this is when you're investing in others. Interest is always operating. Taxes is operating. Cash loaned to others. Now loans go in financing, but this is us loaning money to other people. So we're investing in others. Operating expenses, PPE is always investing in ourselves. Cash proceeds from the sale of our stock. This is money from owners. So if we sell our stock to investors, that is how we're financing our business, and loans are financing. So that's all of those. This is a great example one. All right, Kennedy Corporation reports the following items on cash flow. So we're just identifying operating, investing, or financing. And so again, hit pause if you haven't done this one yet and try to do it on your own and then check your work. So we're just going to put an X in operating, investing, or financing. So cash paid for, did you hit pause? Did you unpause me? Did you already do it? Yeah, you can't tell me. Okay. All right. Cash paid for salaries and wages. That's operating. PPE is investing in ourselves. Money from owners. Oh, good grief, Nicolin, you can do better than this. Okay, taxes are operating, investing in ourselves, dividends paid. Oh, all right, interest is operating. Oh my goodness gracious. Repaying principal to lenders. Used to repurchase stock. Oh, owners. Okay, finally. I was like, look at the trend. Man, I'm bad at my job. Okay, cash provided by dividends and interest on investments. And so receiving provided, receiving dividends and receiving interest is one of the three foolers. Goes as investing. Customers are investing. Sales of investments is investing. So I'm sorry, did I say investing? But I meant operating. These two are both operating. And then money from the bank, financing. So, okay, I marked them right, even if I didn't say it right out loud. But cash received from customers, that money from customers always goes in the operating section. And receiving dividends and receiving interest is operating. So I'm going to pause my video here and then I'm going to do the other half because we're halfway done with our video. So, okay, so I'm going to stop.